All right, from extreme highs yesterday after exit polls to extreme lows today on counting day, the market has clearly witnessed quite a dramatic turn of events. To decode this further, I'm joined by market experts Ambareesh Baliga, Siddarth Bhamre, and business economist Sanchita Mukherji. Thank you so much for your time and for taking us through these details. First, Ambareesh Baliga, to you. The expectations really playing on everyone's mind. Were the expectations too high? What has led to this turn of events for markets today?
I think the clear reason for this turn today is, I would say, the exit polls, because the expectations were increased dramatically post the exit polls. And what has come now is even lower than what most of us were expecting earlier. Because, in fact, I've been saying that, NDA should be anywhere between 310 to 330, and exit polls showed them at 350 plus. And now what we are witnessing is it could be lower than what possibly I also expected. So it's quite natural that with the sort of numbers which are coming right now, that the markets would correct sharply, because yesterday we had seen a major move up. But then, what I would believe is, if NDA finally forms the government, we could some bump up from where we are. But overall, I think the bullishness which you have seen in the last so many months, I think that could be good for the time being, because the government would be seen as a slightly weak government trying to manage the allies, so they'll be spending possibly more time managing allies than focusing on.
Right, we can of course continue to hear the counting day energy and frenzy in the newsroom. But Siddharth, your first thoughts on what has really led to this dramatic fall for markets today?
I think exit poll underestimated the results, and that's the reason even after exit poll we saw only 3.5% rise in stock prices of market at large, which means that the continuation of this government was very well factored in the price. Now, see, again, if you see 290, 300, 310, still, NDA would form government. But then what happens in this kind of coalition government, that the power or the priciness of the coalition partner, that question goes up. And the boldness of the government might come down, which would lead to probably not bold reforms, decision making, which the government has shown in last 5, 10 years. That might, take a slightly backseat. If my take is that if it doesn't go above 315, then that kind of scenario might happen. And hence, market is discounting this, and we are seeing correction. And where are we seeing correction? Only in those pockets where markets have shown big rally, be it PSU stocks, be it manufacturing, infrastructure, construction. And those are the names which are showing sharp corrections. I believe if from a stock market perspective, since this discussion is about stock market, there would be a good demand for spaces where people would hide, and where valuation comfort is also there, which seems to be FMCG and IT according to us at this point.
Mhm. All right, Sanchita, what do you think? Of course, those who were yesterday, living in this euphoria to today's reality at the moment, we've not only seen markets fall, we've seen an extension of that decline in the afternoon trades. Your first thoughts?
To exemplify the phrase, markets always buy the rumor and sell the news. So yesterday, markets bought the rumor. Today, it's selling the news. See, one thing is very clear: markets do not like any kind of uncertainty, and I agree with both the panelists over here. I think the exit polls really did not were very very inaccurate. The markets ran up with a lot of expectation of a stable government coming in with larger numbers and mandates and all of that. Essentially, markets always look towards the pace of reforms. In the Indian economy, it's very, very vital that the pace of reforms continue the way it has been. And any uncertainty on that front will definitely have a very adverse knee jerk reaction, which we are witnessing today. I think further clarity will be given once we proceed more into the round three of counting. But yes, markets are not liking the uncertainty that if a government were to form with not a very strong mandate, And what has been rightly pointed out over here, more time is spent in appeasing allies and in coalition politics and all of that. Pace of reforms will be the first collateral damage.
All right, Ambareesh, Baliga, do you agree it's the pace of reforms also that the market is eyeing, and which is why even if some of these losses are recovered, it's really investor sentiment that has been hit today?
Yeah, I mean, exactly that's what I was mentioning, that the possibly the pace of reforms could slow down. And the markets have been running up in the last so many months, the last, in fact, 2, 3 years, basically on the back of reforms and the focus on growth, which this government had earlier. Now that becomes a question mark. So for the next couple of months, we could see the markets drifting. I mean, I don't see the markets falling. I mean, a couple of like 1,000 points in a day over the next few days. I mean, that's not going to happen. I think we have seen the crash already. I mean, going ahead, see the markets more or less sideways to slightly downwards. But overall, I think the upside for the markets is over for the time being. I think whatever high we saw yesterday could be a high for at least some time to come.
Okay. Siddarth, what do you think for the week ahead then? How will the week ahead pan out? Remember, several projections were being made really of the week ahead post election results. So, your message to those who are now looking at saying, okay, what does the week ahead have in store for us?
Well, I'm not very upbeat for from a near-term perspective because a lot of people would wait till today 4 p.m. or probably end of the day, where the entire results are out, and if they are the way they are looking right now, then I believe there would be some selling which would continue for some more time. Uh, from a shorter term perspective, also the current levels of markets are not looking very interesting, and too much of equity ownership has been happening right now. We are seeing that some of the pockets which are from valuation perspective too expensive, and there would be some normalization which would happen in market, though it would give you some painful time for a week, 10 days, but it is very much required in market because for sensible investing, you also need to have some valuation cushion. Barring particular spaces like IT and FMCG, we are not seeing that cushion anywhere. So this is a welcome correction in market, and I'm strictly talking from market perspective and not political perspective. So any correction is welcome, which will make our jobs easier.
All right, Sanchita, do you agree with the near term outlook and the long term outlook that Siddarth has just given?
Yes, absolutely. Completely in agreement because I'm glad he spoke about the valuations. The valuations are not inexpensive from any aspect vis-a-vis rest of the world, developed markets and other emerging markets. And volatility will continue given that a strong mandate is not emerging. So, like I said, any kind of uncertainty, and given that the facts that the valuations are already not inexpensive and slightly more expensive in the broader markets, volatility will continue.
All right, thanks very much for decoding really the market momentum over the last 2 days for us. And we will continue to track, of course, the markets as well as the economy going forward.